Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. The countdown for the latest macro data, that is the consumer price inflation for the month of June and the index of industrial production factory output is for the month of May, is all set to be released. And joining me to go through that data and dissect it is Rajani Sinha, Chief Economist at CareEdge. Rajani, welcome to the show. We are counting down for those numbers, and as we do that, I just want to recap for our viewers that consumer price inflation, the measure by which we see the impact of inflation on consumers, is seen rising in the month of June on account of higher vegetable prices. Various consensus estimates suggest at 4.6%, also on account of a fading base effect. Rajni, your quick thoughts on that, even as we wait for the number to flash on our screens.
Like we are also expecting CPI inflation to inch up in June. We are expecting a little higher than market consensus. We're expecting around 4.7%.
Breaking news, we have the CPI inflation data that's come in at 4.81% for the month of June. That number higher than what was seen as coming in. Inflation data has come in at 4.61% for 81% for the month of June. That's the number that we are trying to look at, 4.81%, and let's bring that number up on the screen. And Rajni, your quick thoughts on that reading.
What is the food price inflation?
We are getting the details of that disaggregated number, but the headline number at 4.81%, that's the news that we have at this point of time.
Yes, so this is pretty much in line with our expectations. We were expecting CPI inflation to inch up to around 4.7%. And the main reason for that is the increase in food price inflation. And specifically, what we have been seeing is that there has been an increase in sequential momentum that we are seeing in vegetable prices. And though this is a seasonal impact, which we see every time this year, but this time the increase in vegetable prices that we are seeing in the last couple of months is higher than just the seasonal impact. So that's what we are worried about. And we were also expecting around 4.7% or so, and the inflation has come pretty close to that.
Okay. What do you think really has happened as far as that increased number is concerned? Primarily the increase in vegetable prices, which is a seasonal feature, and this year we have had a lot of unseasonal rainfall as well.
So, yes, probably the increase would have been mainly because of vegetable price inflation. But before I go deeper into that, we must not forget that some other components of inflation have already been high. Overall, the number, if you see in the last few months, overall the CPI inflation has gone down because of base effect. But if I strip aside the base effect, some of the components like say service inflation, which gets reflected in miscellaneous items, or for that matter, even housing inflation, they have been hovering at a high level. So apart from food inflation, these components also are showing high inflation. But because of base effect, overall inflation has been coming down, and hence, we were not much concerned about these components. But yes, specifically, if we look at food inflation, what has happened is that in the month of June, we had deficient rainfall, and now in the first week of July, while overall monsoon, if we see the progress so far, it has moved to surplus of around 2% or so. But there's large skewness in distribution of the spatial distribution of the rainfall. So some of the regions like North and Western region of India, while they are seeing huge surplus rainfall, the south and eastern India is still seeing deficient rainfall. And in fact, that is having an impact on their sowing of kharif crop. And we are already seeing that the sowing data that we have uh, for some of the crops like rice, pulses, cotton, the sowing is less than what we had seen, around this time last year. So, say for rice and pulses, it is around more than 20% below what we had in the corresponding period of last year. So
Okay.
there is concern that this could put further pressure on food inflation going forward.
Okay, we have some more numbers that have been flashing on our screens, viewers, with regard to the food price inflation data that was mentioned. CPI inflation, the overall combined rate at 4.81, as we just mentioned. This is versus 4.25% month on month. As far as food price inflation is concerned, and by the way, we also have the May IIP numbers coming in at 5.2%. I'll repeat that the May IIP data shows 5.2% for the month of May. Inflation at 4.49% as far as the food basket is concerned. Urban inflation is up at 4.96% versus 4.27%. Rural inflation is also up. Vegetable price inflation is actually at minus 0.93%. Fuel and light inflation at 3.92% versus 4.64% month on month. Housing inflation at 4.56% versus 4.84% month on month. Clothing and footwear inflation at 6.19% versus 6.64%. Pulses inflation at 10.53% versus 6.56%. Rajni, I went through some of these numbers. Explain to our viewers what you are making of those.
So, like I mentioned earlier, cereal price inflation, like wheat price inflation, was already a concern. But now, what has happened is that we are seeing inflation inching up in items like rice and pulses also. Apart from what we've been discussing, the spike in vegetable price inflation. Let's not read into too much into the negative number we have got for vegetable price inflation. That's simply because of the base effect. If you look at the sequential momentum, it has been growing quite sharply on a month on month basis, which is what is concerning. So, if you look at the very basic items of daily consumption, which is like, wheat, rice, dal, vegetables, milk inflation was already high. So, all the items which is of very, regular daily consumption of household, we are seeing inflation in all these items. Now, uh, you know, one can argue that this is completely because of supply side factors, and a big part of it is because of seasonal factors, and it's going to settle down in the months to come. But having said that, RBI would be concerned that this would have an impact on household inflationary expectations. So that's something we have to watch out for. And like I mentioned earlier, apart from food price inflation, some other components like, say, housing price inflation, some components of miscellaneous items like personal goods and some service sector items, they were already showing high inflation. So that is the scenario on, overall price momentum on a month basis. But on the positive note, another point is that if you look at WPI inflation, that has been going down. In fact, there we are seeing contraction happening. So the last data we had for WPI inflation, we saw a contraction of more than 3%. And for the full year also for FY24, we are expecting WPI inflation to contract. So that's something which would also, going to impact CPI inflation with a lag. So that's also something which will support CPI inflation at lower level.
Okay.
So overall, we are still maintaining our CPI inflation projection of around 5% or so.
Okay. Just one quick point before I get you to comment about IIP. What does this mean for the monetary policy in the next review?
I think in the next review, I do not expect any action from the central bank. I think the central bank is just going to adopt a wait and watch mode. They would be cautious because as I mentioned, food price inflation going up, even if it is because of seasonal factors, cannot be ignored because that can have a huge impact on household inflationary expectation. But at the same time, if you see overall, apart from food, overall global commodity prices are going down. And the way the global growth is panning out, say in US, China, we do not expect commodity prices to again start going up in the coming, in the near term. So on that front, there is comfort for the central bank that the other part of inflation, commodity price inflation, is unlikely to inch up. And food price inflation hopefully will be a seasonal thing and will settle down in a few months. So I think RBI is not going to take any action. They are just going to wait and watch. Anyways, we were not expecting the central bank to cut rates. Even before inflation had started inching up, we were of the view that if the growth momentum is good and there are too many threats for inflation, so RBI would adopt a wait and watch mode.
Okay, now let's turn our attention to IIP. Factory output has risen month on month from 4.2%. It's up in May, and that 5.2% reading a healthy bump up, and this is after a significant sort of 5-month low that we had seen in the month of March at 1.7%. Rajani, what does this number tell you?
So, in fact, we were expecting IIP growth to be a little higher. We were expecting around 6% or so. There's a lot of base effect also playing on the numbers. So, it's difficult to interpret just by the YOY number as such. But overall, if you see in the economy, growth momentum is picking up. If you look at the many other economic indicators that we are getting, most of the indicators are showing a pickup in growth momentum. But having said that, what is critical is that what we've been seeing in IIP, if I break it up, what we are seeing is that IIP consumer goods is not doing well. So in terms of component, while the IIP infrastructure and construction, this component is doing well, which is a positive indicator. But at the same time, consumption, which we have been waiting for consumption to pick up because that would also give a boost to further investment in the economy. IIP consumer goods is not very encouraging, specifically IIP consumer durables. So that's the thing that we will be watching out for. Our expectation is that with inflation going down, uh, with the base effect, like I mentioned, inflation is likely to hover in this range. We are expecting that in the third quarter, fourth quarter of FY24, it will increase to more than 5%, but not a very significant increase. So in that scenario, we are expecting rural consumption to pick up, and that should be supportive of overall consumption improving in the economy. But having said that, we will have to watch out what happens on the monsoon front because that will have a strong bearing on overall rural demand. And while IMD has given a projection of normal monsoon, even concern around threat around El Nino, but what we have seen so far is that the spatial distribution of rainfall has not been very good, which is concerning. So the rural pickup in rural demand would be quite dependent on how monsoon pans out, specifically in the month of July.
Absolutely, and therefore it's going to be a bit of a wait and watch situation as far as the growth impetus is concerned, as well as how price behavior happens. Rajani, Sinha, thank you very much for your time with us to join us on that short breaking news update on the latest inflation and IIP growth numbers. If you've been, thank you very much for watching. इसको मैं ऑफलाइन कर लेता।
हमारा मेल क्रिएट हो रखा है, हमारा टीसीएस का भी और
नहीं तो
HCL का भी।
TC
We have exclusively learned from our sources that Centre has collected close to rupees 55,000 crore under small savings schemes.